This conference will now be recorded.
Want to welcome everybody to the next installment of our Brevard Business Resource webinar series. I want to thank all of our partners who have joined in on this initiative, and I had them on the previous slide, but the 4 chambers of commerce in Brevard County, Titusville, Cocoa Beach, Melbourne, and Palm Bay chambers are all participating, as well as We Venture, SBDC, the Economic Development Commission of Florida Space Coast, Career Source Brevard, Groundswell, and Melbourne Main Street. I think I covered them all, but if I didn't, my apologies to any partners that I may have missed. And today we'll be talking specifically about some of the tax implications and changes, policy changes as they relate to small businesses in light of this the CARES Act and other incentive packages and relief packages that have been pushed out. And so we're pleased to have a panel of presenters today. And our first one that's going to kick off is Lewis Wilson. And so I'm taking this opportunity to make Lewis the presenter. So we're going to do a quick slide switch. Lewis, you now have the presenter capabilities. You'll need to unmute yourself and share your slides. There we go. I'm seeing your screen. So now all you need to do is unmute yourself and you should be able to take over, and we look forward to hearing from you. We can't hear you. Lewis, can you hear us? You should have a microphone button on your panel. All right, I see you can hear me, but I can't hear you, Lewis. So on your
screen. How about now?
There we go. Perfect. We can hear you.
Apologies about that. Hello, everybody. Can you see the screen there? Is this still up?
Yep, we can see it.
Great. My name's Lou Wilson, and I'm an employment attorney with Fort Harrison. What we're proposing that I will do with you at the start of our program is kind of walk you through the paid leave obligations that employers inherit as part of what Congress enacted to address the COVID-19 crisis. It's been something that's been talked about a lot, about enacting some kind of a formal paid leave program, but we actually now have it, and we're going to kind of focus in on that and just sort of help pay for it. Part of what they implemented allows employers to take tax credits against payroll, which Mike and Rob will be speaking to. But sort of at the outset, I'll kind of walk you through the main parts of it. And it's very important for you as employers to be aware of these things. Unfortunately, here in Florida, we're actually, a lot of this will be enforced under the Fair Labor Standards Act, which is the federal wage hour law. And here in Florida, we have an abundance of attorneys, particularly plaintiffs' attorneys, and actually have the #1 and #4 districts for federal litigation in this area. So one of the things we employment lawyers are concerned in watching is that there could be a spike in people bringing actions claiming that they haven't been paid leave when they're entitled to it under this act, because of the mechanism they set up for it is really intended to be enforced just like you would a wage hour claim if, for instance, you failed to pay someone overtime or some other pay that they were entitled to. So keep that in mind. And again, this is sort of a big picture, and I want to kind of make you aware of some resources that are also out there. This was sort of the first major federal initiative to address the COVID-19 pandemic. It was signed into law March 18th and went effective April 1. And it contains really 2 big provisions that we're going to focus in on and give you a little bit of background. The Emergency Paid Sick Leave Act, which gives everybody 2 weeks of paid leave. There's no sort of minimum that you have to have had work for an employer. If you're there working full-time, part-time, you're entitled to 2 weeks under these 6 conditions that we're going to go to. If you meet one of those 6 conditions, you're entitled to get paid up to sort of a statutory max on your pay. The other thing they did in recognition of all the schools that were closing down and childcare concerns is they amended part of the FMLA to add a new feature of FMLA, family and medical leave, which you may be familiar with. If you're part of a larger employer who has 50 or more employees, you become subject to this federal law that provides protected leave. And you can use that protected leave to take care of a child who's, for instance, home because the Brevard public schools are closed down. And it, again, it's paid, but it's partially paid. And we're going to talk about the interplay with the regular FMLA that comes into that if you're a larger employer who already has employees with existing FMLA. You may have heard a little bit about this act already. It was, again, sort of the first law to come out on this and drew a lot of attention, but there's been sort of significant developments over the past 2 weeks. The Department of Labor, which is the federal agency responsible for the FMLA and the FLSA, was given the responsibility to enact and oversee this paid leave law. And what they did is they came out with the sort of more formal rules and guidance about how to comply with these two laws and understanding various provisions in the wording of the statute. And I'm going to show you again, there's a lot of resources out there for employers, including small employers, to help them understand some of the more complicated aspects of it. But they came out with a major 124-page commentary and rule right on the day this was coming into effect. Prior to that, they were posting FAQs, which I'll show to you as well, which are a valuable resource. I think they're very kind of, they hit the key situations and questions that most employers had and gave you really practical guidance about what to be thinking about and what you need to know. So we'll take a look at those so you can have a sense. They've actually got a full page of resources that you can look at. Maybe we'll just take a quick look right now just to show you, because if you are in a bind and need some guidance about this, they have, like I said, a whole page here. If you go to the Department of Labor pandemic flu FCRA, if you just search that in Google, it'll take you to this resource page that they have up, and they include on there the fact sheet, which really summarizes it both from an employee and an employer standpoint. And then they posted this very helpful question and answer, which a lot of it was generated out of the questions we as employment lawyers and larger employers submitted right after the rules came, right after the statute was passed, about what does this mean, what does that mean? For instance, how do I analyze if I have 500 employees or more, if I'm a larger company that has subsidiaries and that kind of thing. So it goes through and analyzes those various situations. It also gets into businesses with fewer than 50 employees and how are these acts going to apply to you. So
Louis, just real fast, you're not seeing, if you have switched, all we're seeing is the doc that was originally on your screen. So I don't know if you have a second screen that maybe that's okay.
All right, let me come back. So just note to selves for all of you, if you search DOL pandemic FFCRA, it'll take you to a page that they've set up very nicely. And apologies for me not being tech savvy enough to figure out how to incorporate that in my PowerPoint, but it's there for you. And again, I recommend, and we could probably send it around to you, a link to it when we send out a copy of this recording. You probably also heard about, sorry, go ahead.
Just so that you know, what we're looking at is a screen that is a document that says, as required by applicable law and is not compensated as paid leave. Is there another screen you're seeing?
Yes.
Okay, so if you click the share button, it should give you the option to, there we go.
And Catherine Leboff just put the link in the chat for everybody.
Perfect.
Okay.
That's
Are we
perfect.
good?
We got
Can
it.
you see this CARES Act?
You see, not the same as CARES Act.
All right. We are in a brave new world where old fogies like me have to figure out how to do these things. But seriously, so, you hear a lot about the CARES Act as well. So I want to just kind of help people understand that the two different acts, the Families First Coronavirus Relief Act was the one with the paid leave. Subsequent to that, the second batch of legislation, the $2 trillion stimulus package came along, and that's the CARES Act. And that is the one that provides for individual stimulus tax payments that people should start getting this week, as well as the Paycheck Protection Plan for smaller and medium-sized employers and a loan program for larger employers that comes with some kind of dubious strings attached, given that they're taking federal money. But there's also a key part that has come up for a lot of clients, for us as well, of the CARES Act that expands significantly the unemployment available temporarily to individuals who have lost employment as a result of COVID-19. To the extent we have time, I'm happy to take some questions later on about that as well. But basically, there's a $600 supplement to existing Florida unemployment, which is $275 a week, not a whole lot. They've added another $600 per week for 4 months to that if you're losing job because of COVID-19. They've also created a separate category that expands it for people who are self-employed or what they call gig economy, like independent contractors. You can now apply and get that if you're at home because you're taking care of somebody who has COVID-19, or you have childcare needs that can't be met by your employer for some reason. You can apply to get unemployment under that separate program. And then there's also an extension of unemployment for another 13 weeks for COVID-related reasons that came through with the COVID Act. It's candidly kind of a mess right now. You've probably heard and seen stories about the DEO and how much trouble they're having processing this huge wave of claims that have been filed. They've supposedly added 20 some odd servers and are bringing in people and resources from other agencies, and it's paper applications, doing everything they can to throw resources to make it better. But part of what we haven't seen is implementation of how they're going to actually apply the eligibility criteria for some of these things. So hopefully in the next week or two, we'll get more clarity on that. But it's really intended to expand the safety net there for people who are losing jobs or being sent home for lack of work because of the shutdown, state safety at home order, and those kinds of situations. So it's a resource to the extent you have individuals you're having to lay off or send home without work, is sometimes called a furlough. You might want to share with them information about those programs and encourage them to at least apply and see what they can do. Again, the FFCRA, that's paid leaves, kind of switching back to that, it only covers you if you're 500 or fewer employees. It gives you this 2 weeks of sick leave. If you're a larger employer with more than 500 employees, you're not actually subject to this. They don't actually take any position on what those employers are supposed to do or expected to do. It's up to them, kind of as good corporate citizens, to make a call about how they treat people who are having effects from the pandemic. We're going to go through those 6 qualifying reasons, but the idea is if you qualify under one of those, you can take leave for 2 weeks. As I mentioned, they've also expanded an aspect of the Family Medical Leave Act for up to 10 additional weeks, so a total of 12 weeks you can be out at a capped cost of $200 per day. It's supposed to be 2/3 of the person's regular pay. And again, I'm kind of going through this fastly, but it's covered in clear terms on the Department of Labor's website and posters and other guidance they have for employers. So you can go back to those and check them after we've wrapped here. But it's again sort of meant to be an add-on to FMLA to acknowledge kind of this time we're going through and the possibility that people might need to be at home. And the important thing here is that it's meant to be, if you cannot telework some other way, there's all these things are subject to, unless the person cannot telework otherwise, and that is work remotely. So if you're somehow in a position or a job that doesn't lend itself to teleworking, you can qualify for this. But if you are able to work from home, there's usually a process you have to go through and analyzing whether that person can maybe come to an arrangement with their employer that allows them to work from home. There are some exceptions to this act, and they give an employer the flexibility to exempt certain employees, including healthcare providers or emergency responders. Those, as we're going to talk about, those definitions were much larger and broader than people were expecting. The Department of Labor took a very broad view of what Congress was trying to do there, at least in their reading. And then there's also a small business exception. If you have fewer than 50 employees and you satisfy one of 3 criteria, you may be exempted from those provisions that require you to provide leave for someone to be at home for childcare reasons. And sort of significantly, the Department of Labor has come out and said you're not, as a small business, required to file anything, but you do have to be able to make the case and demonstrate that you satisfy one of these 3 criteria that we're going to flag for you to have a look at. The other sort of significant final aspect is Congress is trying to figure out a way to make this as cost neutral as possible to employers, including small employers. So they have done, they partnered with the IRS to figure out a way to help give you kind of more instantaneous relief by allowing you to do offsets against your payroll taxes, which Mike and Rob will talk about. Again, to sort of try to encourage employers to make this available without having it make times even tougher for them. One thing to keep in mind is that everybody subject to the act is required as of April 1st to have one of these handy posters up, just like you would for the Florida and federal minimum wage and OSHA and workers' comp. You can print them off of the Department of Labor's website, and they sort of succinctly summarize both acts and employees' rights under those acts. They are now available in a multitude of languages, including Spanish, Chinese, and some other variations, but there's not a requirement necessarily that you post in those languages. It's meant just to make it accessible to them. And the Department of Labor has recognized that we're in the 21st century, so if you typically do your postings and your notices through email or through some kind of internet portal, that is also generally acceptable. So there's actually specific question and answers on the Department of Labor website about what your posting obligations are to the extent you have a question about that. The kind of key things we got surprised by were when the rules finally came out. They made clear that it's only on private employers with 500 or more employees, and they took a sort of broad view of that. And like I said, we've covered some of this already about the 50 employees. If you can meet certain rules and you don't actually have to file anything or have anything on file with the Department of Labor, you just have to be able to make the case that you satisfy these criteria. I would, again, kind of caution you and stress to you the importance of being able to make the case when we go to those points because of the litigious nature of Florida and some of our underemployed plaintiffs' attorney colleagues. This is kind of, again, a recap of what we've kind of I already kind of went through, but the Department of Labor and the guidance made it clear that this is 10 days on top of paid sick leave that a person might already have. Some of the paid leave is less than full pay, like 2/3 pay for some forms. An employee can choose to access their existing paid leave to gross that up to bring them up to their full salary. That's something generally done in collaboration with the employer, but just something to be aware of if you already offer paid sick leave and somebody's going out on one of these leaves and it drops them because of the cap or because of it being for childcare, that it's not their full pay. They have the option of enhancing it potentially with their existing vacation or sick leave. They also took a broad leave. It's defined as you're at home to take care of your child, and that's traditionally viewed as your biological or adopted son or daughter, but it can also be somebody you're loco parentis with, or that the Department of Labor clarified somebody who's actually older. If you have a child with disabilities who's older than 18, they're not going to get so hung up on that if you need to be home to care for that individual. The leave's supposed to be accessible to you. The kind of one of the more controversial aspects of the reading that the Department of Labor gave the statute was whether somebody's entitled to sick leave when their job or business is shut down due to a stay-in-place order or other kind of governmental order. The Department of Labor took a very narrow view of this, and basically, if you are out of work because there is no work because the government has told everyone to stay home, they said that should not be a qualifying circumstance for this paid leave. You have no work that you're missing out on by virtue of the shutdown or the lack of customers to your employer's business. You can, however, seek unemployment, and that's kind of where they're trying to push people instead of having it funnel through the employer. It made a lot of people kind of scratch their heads giving some of the wording on one of the 6 factors that you can claim paid sick leave for, but it's something that's out there. Members of Congress and the Democratic side have already pushed back and wrote the Department of Labor and told them they got the rule wrong and they need to fix it. But so we're watching that and see what happens. But as of right now, I would, if you have any questions about whether you're in a situation where you should be giving your employees paid leave because of a shutdown order, you should, or stay-at-home order, you should be consulting the Department of Labor guidance on that, or working with the Employment Council. Here again are kind of the 6 factors that are in the statute and they're summarized in the poster. And again, the important qualifier here is that you have to be unable to work or telework. So if somebody can remotely work, they cannot sit at home and opt to get paid for 2 weeks and not work. If the employer has a means to allow that person to productively work from home, then they're not going to otherwise be eligible for any of these leaves. So as I mentioned, that first qualifying condition is the one that everybody's hung up on right now, because it's supposed, if you read it literally, it sounds like if an employee cannot work because of a stay-at-home order, or because they're over 65 or have pre-existing medical conditions that make them vulnerable to COVID-19, that they should be able to collect the 2 weeks of paid sick leave. But that's not how the Department of Labor is reading it. If there's no customers coming to that business because it's not an essential business, they've said then it should be shut down. And the reason they're not getting it is because there's no work for them. I would keep an eye on that and see what happens. It could be amended or a different reading given. Most employers, I think, are trying to be flexible with people right now and work with them to figure out solutions to that issue, especially if you're a non-essential business. But there are also, that's supposed to be something that qualifies somebody for unemployment. If you're looking for alternatives, that might be something else for the person to consider. The number 2 and 3 involve people experiencing symptoms or being treated by a healthcare provider. The Department of Labor made clear that the person has to actually be seeking and being affirmatively taking steps to get treatment, and or be able to give you the name of a healthcare provider that's actually directed them to be staying at home. We're going to touch on that. The IRS has put out the guidance about what documents an employer should have on hand to be able to substantiate that it properly gave all this paid leave. And it's really pretty minimal, to be honest. It's not like you're actually expected to go out and get a note from your employee saying, Dr. Joe Smith Joe Smith, Dr. Joe Smith, tell this person to stay home. It's more like all the employee has to do is tell you over the phone that my doctor at Omni Health has told me to stay home. His name is Dr. Joe, and you make a record of that. It's meant to, and that's something that, again, we're sort of seeing if there's going to be further guidance or pushback on it, but they're trying to make it more liberal and easy to access. And the IRS, like I said, has put minimal burden on the employer as far as what you have to keep in the way of records to be able to claim the payroll credit for it. Some of these provide for reduced payment of what HANA leave you can have. We're going to talk about that in a little bit here too. But the final category there, experiencing any other substantial similar condition, we have not really gotten any guidance on that yet. That's sort of a catch-all that they left there in case new things come along or the Health and Human Services decides to add to it. In the guidance, there's these rules, and there's also these question and answers. They talk a little bit about what is teleworking and what it, kind of help you understand what the parameters of that. I cut and paste that into this slide, but if you dare to slog through the 124 pages, at the end of it, you'll get to numbered sections where they define terms, and they define telework under 826.10, and that will help you kind of understand if you're trying to work with an employee about whether or not they can take telework that might in turn disqualify them from taking the paid leave, what kind of things you should be looking at and understanding. So I put it there for your guidance. And again, it's handled in the question and answers a little bit too, in a more succinct fashion. You have to be careful in any situation where you have people working from home to make sure you're accurately tracking their hours, and that's something you're not relieved of by virtue of this bill and having teleworking arrangements. So if you do, and I recognize a lot of companies and employers are finding themselves in this unique situation now where for the first time they have teleworking arrangements and they're just kind of giving people computers or letting them take work home and trying to get by. You really want to be careful and proactive in making sure that you're keeping accurate time records of when they're truly working. And I recognize that's a challenge because a lot of times people, and this is something that the regulations also take consideration of, a lot of times people might be working 2 hours in the morning, 3 hours in the afternoon, and another 3 hours in the evening because they have childcare, or they've got that flexibility where they're doing multiple things. And in the spirit of the act, I think that's what they're expecting, and you're supposed to still be figuring out a way to help track the time the employee's working. So be thinking about that, like a log or something, or having the employee affirmatively tell you each day or sign off on what time of work they did for that day, so that if it's an hourly employee, I'm speaking of mainly, if they're salary, you have a lot more flexibility. But if it's somebody who could go into overtime, you obviously want to be careful about that. Excuse me. Here I've kind of broken down, this is again information that's in the statute, and then the information sheets on DOL's website about what you get. It's 2 weeks of full time. If you're full time, you get 2 weeks, maximum of 80 hours of paid leave, and it's capped at $511 per day for those 2 weeks. There's other forms of it that are at 2/3. That's reasons 4, 5, and 6, and that involves being at home for care of your children or others in your household, or that catch-all undefined condition. Those are going to be paid at 2/3 of the person's regular rate of pay, capped at $200 a day. Again, there's suggestion in the rules that people can use their PTO or sick banks to supplement that to cover the 1/3 they're not getting, or something above the $200, but you can in essence deduct that and take a credit against their existing PTO. You just wouldn't be able to claim that as a payroll tax credit. All this, to be clear, goes away at the end of the year. It's not meant to carry into 2021 at this point. December 31, it's all supposed to sunset. And keep in mind, you can't tell an employee if they call out or want to use this leave that, hey, you need to find coverage, or you're leaving me short by doing this last minute. They have a right to this leave, and that's something the Department of Labor has been very clear about. Coming now to the small business exceptions, I think will probably be relevant for a lot of you, and you'll want to take a look at this, particularly if you're thinking, oh no, how am I possibly going to manage this? They've laid out some specific considerations that you need to be able to show and provide, and they've made an exception about not having to grant an individual time to be at home because of expanded family medical leave or care of children. When doing so would jeopardize the viability of small businesses that go into concern, which sounds like a lot of legal jargon, but they've tried to break that out and give you sort of a more manageable analysis, or kind of 3 different boxes you could check, but you got to check one of these. And again, these are spelled out in the regulations a little bit, and I've tried to give you a more succinct summary of it. But if you can show that giving that sick leave is going to cause an undue financial burden on your company because of the small business, that may actually force you to cease operating at minimal capacity, you might be able to claim this. Or if that person is so vital that not having them was going to cause you some severe burden or harm, that might also be because they have specialized skill or something. Or if you just don't have enough bodies, by losing one more person, it's going to kind of put you over the edge. And I'm kind of giving you the short and sweet version of that. But you're going to want it at the end of the day because of, again, I keep saying this, sorry, but it's true, but because of the sort of litigious nature of some of our attorneys in this part of Florida, to be able to really be able to show you've looked at this and you can show that if you're going to rely on one of these as a reason for turning somebody's leave down, because the Department of Labor basically right now is not giving you any kind of paperwork to say, yes, you satisfy the criteria. They're relying on small employers to do this themselves and police it themselves. So it's caused some of us to be concerned about how that's going to be challenged, or if there's going to be people who challenge it in a case-by-case basis. The Department of Labor said repeatedly, do not send us any documentation. It's rather something you're supposed to retain in your records. And even if you satisfy this, it doesn't relieve you of the obligation to post something. So just keep that in mind. You still have an obligation to post, even if you're going to claim it's too much of a burden for our small company to be able to allow you to be paid and take leave to be home with kids right now. In the interest of time, I'm going to fly through these again, but this is something I alluded to at the beginning. The Department of Labor came out with very broad definitions of the healthcare provider exemption, which basically says if you as an employer deem your employees to be healthcare providers, you can take them out of this paid sick leave and expanded family medical leave law altogether. They don't get it. I mean, you can say because it's basically you need to be front lines or helping the country get through this time. I think that's what Congress initially intended. And healthcare provider has a very distinct meaning under the FMLA, meaning an actual doctor or someone who can sign medical paperwork. But the Department of Labor has read it meaning anyone who's employed by any of these places, including a doctor's office, a healthcare retirement facility, nursing facility, or similar institution, includes permanent or temporary institutions. And by saying anyone employed, it literally sounds like what they're intending is if it's no matter if it's the nurse or it's somebody in the janitorial staff, if they're working for one of these companies, it could be they could be deemed a healthcare provider that the employer can in turn exempt from this statute, from both the FMLA part and the paid leave part. This is quite kind of controversial in Congress right now, and there's an ongoing debate about threats to make the Department of Labor rewrite the rule because they say this is not what we intended. That the Democratic side of the aisle is taking that position right now, and again, it includes an entity that contracts with one of these institutions. So it's very broad, and we're still kind of waiting to see what's going to come out of that. I just wanted to put it on your radar. It's something to continue to watch and see if there's updated guidance on it. But if you are involved in one of these industries, you maybe want to work with an attorney or a legal counsel about this. And if you do think it makes sense, it might be something that you explore further. Same for emergency responders. I have a few public sector clients who are questioning what this would mean. And they give a very broad definition of who can be exempted as an emergency responder, including public works personnel and the staff that work and support these places too. So that's another one where you might want to look. I see we've already eaten half an hour of time, so I'm going to fly through the rest of this piece about the FMLA, but just sort of big picture. As I mentioned, in closing out the 2 weeks of paid sick leave, it is enforced as an offshoot of the Fair Labor Standards Act, which means it provides if you get sued because you haven't paid that, you may be asked to pay the other side's attorney's fees. And there's also what they call liquidated damages for willful violations, which means any damages are doubled. And that's kind of what makes these attractive claims against employers, because the attorney representing the employee can claim their fees in addition to doubling of what the employee wasn't paid. So even if it's $100 that the employee was shorted for one day and not getting the sick leave for that day, they can bring a claim and seek to have the fees paid as part of it. There's also very clear language about not retaliating against individuals. And so that's something you're going to walk cautiously about if you have questions or you're not sure when somebody's trying to use it. You don't want to give the appearance or reassigning them to some less favorable position when they've taken the leave as punishment. Those are all can be deemed forms of retaliation that you have to be careful and sensitive to. Kind of quickly on the FMLA. So we're switching gears now to the FMLA, which again is additional leave you can take to care for a child. You have to be working for the employer's 30 days. This is separate. This is different from the paid leave. You have to have 30 days of service with that employer to qualify for this. And that's unlike the FMLA, which requires a whole year and 1,250 hours. So it's kind of a minimal threshold that has to be worked. And it also is subject to that telework exemption. If the person can be at home with their children, but telework, including working a telework flexible schedule, then they wouldn't qualify for this 2/3 paid leave. There's ways that you're going to want to look at that with the employee. I mean, the Department of Labor is trying to encourage people to work with each other and come up with a plan that everyone's happy with. But I'm already having situations where people are questioning claims that they can't telework because of the need to be at home, or they're trying to actually be the educator for their kids right now, which is obviously a challenge. Up to 12 weeks, the first 2 weeks, try and simplify this for you. It's 12 weeks of leave, but in those first 2 weeks, you can take the paid leave. This way the statute's written, it's very convoluted, but it's really 10 weeks, but you get those first 2 weeks under the Paid Sick Leave Act at 2/3 your salary. And as I said, you can use some accrued leave against some of this to bring up what you have already on the books. You can use it intermittently too, which is something that's the bane of many of an employer's existence when employees choose to use small increments of time rather than whole days and draw it out over a longer period of time. that's something that's a little more complicated, but again, there's some guidance in the rules and the FAQs that can help you. If an employee tells you, for instance, I can work Mondays and Tuesdays, but the other days I need to use my EFMLA because my husband's going to not be there or whatever the situation is, you may want to look at that, and that's going to be something they potentially have the right to do, just like they would for regular FMLA. And there's also like FMLA job restoration rights. So if they've decided to take the full 10 weeks or 12 weeks total off, they are generally entitled to get their job back at the end of that period of time. There's a limited exception if you're smaller than 25 employees. And I've outlined the criteria there. You can take a look at that in the statute and the guidance as well. I'm kind of segueing now to where Mike and Rob will be talking about. The Department of Labor is kind of partnered with the IRS to talk about what kind of documentation you need to have to prove and validate this leave. And so that's where you're going to find the guidance right now about what documentation you need to have. And it's really more in the form of just records of what the employee shares with you, rather than actual backup documentation to prove something. And the IRS is recommending that you keep that for 4 years. But at the end of the day, if you're going to take payroll credits for people being out and taking this leave, they want you to be able to come back and show them, okay, tell me what was going on with this particular person, including like if it's a stay-at-home order, you're going to have to identify the entity or body that told the person to stay home and those kinds of things. And same for schools that have directed that their schools are closed, to sort of be able to explain what specific school has been shut down or daycare, that kind of thing. That is it. I think I managed to get through everything. I know that's a lot, and that's why it's 124 pages and 79 FAQs, but this will at least get you a sense of what's out there. And again, I would continue to stay tuned to the Department of Labor's webpage and the news to see what comes out of some of these issues that are still being debated. If that's, I'll turn it over to, I guess, Mike, are you there?
Okay, there's Michael. You brought your screen up, but there you go. Are you unmuted?
Yep.
Okay, perfect. Take it away.
All right. So as Lewis just said, documentation. There's on the IRS website, there's a very lengthy COVID-19 related tax credits for required paid leave provided by small and medium-sized business FAQs. And in one of those FAQs, it discusses documentation. It's number 45. The documentation that it is basically giving guidance on is documentation to show how the employer determined the amount of qualified sick and family leave wages paid to employees that are eligible for the credit, including records of work, telework, and qualified sick leave and qualified family leave. Documentation to show how the employer determined the amount of qualified health plan expenses, which we haven't talked about, but I will in just a sec. Allocated to wages and the methods to compute this allocation. Copies of any forms completed, which the IRS Form 7200, which is an advanced employer credits due to COVID-19 form that was submitted to the IRS. Copies of all completed quarterly Form 941s that each employer would send in as well. And any other third-party information, such as if you use payroll services, information that you provided to them or that they provided to you. And again, as Lewis said, they're suggesting that you keep that at least 4 years. Some of the credits that are available are, as you see at the top of my screen here, emergency, the EFMLA. As we discussed, if you're unable to work but need to care for a child whose school or care is closed due to COVID-19, It is available. It's capped at 2/3, up to $10,000 in aggregate per employee for up to 10 weeks. The credit basically breaks down to that amount of the credit plus the medical, including the medical leave, plus the employer's portion of the Medicare taxes, plus that portion of allocated health insurance coverage. Allocated health insurance coverage, basically by the IRS, is if you can determine the amount of health coverage for that employee on a yearly basis and break it down to a daily amount, you can use that to offset take this credit and use it to offset these wages. How do you go about doing that? That is done on the payroll tax returns, and I'll walk through some of that as well. But the other side of this, I gotta scroll down a little bit, is the emergency paid leave for shelf. And again, it's another fully refundable tax credit equal to the required paid sick leave, including the employer Medicare tax, plus the allocated health insurance coverage. For the self, again, it's capped at $511 a day or $5,110 in aggregate per employee. Employers are not subject to the employer portion of Social Security tax. This is up to 2 weeks or 80 hours. Then we have the emergency paid leave, paid sick leave, where you're taking care of others. And again, capped at 2/3 regular pay, capped at $200 per day, $10,000 in the aggregate, up to 10 weeks. And again, same kind of formula, fully refundable tax credit equal to the required family and medical leave, including employer Medicare tax, plus the allocated health insurance. Again, the employer is not subject to the employer portion of Social Security tax on those wages. Eligible employers that pay qualified leave wages will be able to retain an amount of all federal employment taxes equal to the amount of the qualified leave wages paid, plus the health insurance, and the employer's portion of the Medicare tax imposed on those wages, rather than depositing them with the IRS. The federal employment taxes that are available for retention by an employer include both federal income tax withheld from employees, the employee's share of Social Security Medicare taxes, and the employer's share of Social Security and Medicare taxes with respect to all employees. So if you have an employee that's on one of these leaves and you have some employees that aren't, you can use the payroll taxes that you would be paying for those employees that aren't on this leave to offset what you're paying for those employees that are on it. If the employment taxes yet to be deposited are not sufficient to cover the employer's cost of qualified leave wages, plus the health insurance, plus the employer's share of the Medicare taxes imposed on those wages, the employer can file a form, which is IRS Form 7200, which is an advance of employer credits due to COVID-19. These credits are applying for wages paid between April 1st and December 31st of 2020. A couple of questions that we've received and are covered again in this in the IRS frequently asked questions. May an eligible employer receive both tax credits for qualified leave wages under the Families First Coronavirus Response Act and a small business interruption loan under the CARES Act? Yes, they can. However, if an eligible employer receives tax credits for qualified leave wages, those same wages are not eligible as payroll costs for the purposes of receiving loan forgiveness under the CARES Act. So again, you're going to have to make sure you qualify which wages you're paying from where and how you're doing so. Another question was, what amount does the eligible employer receiving tax credits for qualified leave wages need to include in income? An eligible employer must include the full amount of credits for qualified leave wages in gross income. Basically, what you're doing is you're offsetting the expense you would have by those leave credits. Thus, it's leaving you with neither income nor loss for those amounts. And then there's one other credit that we really haven't talked about, and it's the employee retention credit. The employee retention credit was a refundable tax credit that was equal to 50% up to $10,000 in wages paid by an eligible employer whose business has been financially impacted by COVID-19. This applies to all employers regardless of size, with two exceptions. The first being state and local governments. The second exception is small businesses who take a small business loan, i.e. the PPP. The CARES Act instructed the IRS to provide for the recapture of these tax credits if an employer has taken tax credits and later obtains a PPP. To qualify, employers must meet kind of two hurdles. First, the business is either fully or partially suspended by the government order due to COVID-19, or the business's gross receipts are 50% less than the comparable quarter of 2019. But once those gross receipts are above 80% of the comparable quarter previous year, you're no longer qualified for that quarter that you're in. Credit is calculated as the amount is 50% of qualifying wages paid up to $10,000 in total wages paid after March 12th, 2020 and before January 1st, 2021. And again, this also includes a portion of the company's cost for the employer health insurance for the employees. So in this case, how do I receive my credit? Employers can immediately be reimbursed for the credit by reducing their required deposits of payroll taxes again that have been withheld from employees' wages by the amount of the credit. Eligible employee, yes?
We're still only seeing, I just want to make sure, we're still only seeing the screen that says emergency paid sick leave others.
Correct. Yeah, I don't have a slide for this.
Okay, that's fine. I just wanted to make sure.
Not a problem.
Sorry.
Yep. Eligible employees will report their qualified wages and related health insurance costs for each quarter on their quarterly 941s beginning in the second quarter of this year. If the employer's employment tax deposits are not sufficient to cover the credits, again, the employer can file that IRS form 7200 and receive the amount of overage back from the IRS as a refundable credit. And that's really all I've got right now. I'll turn it over to Rob Brolin, my partner.
Okay, Rob, I've made you presenter. So you should be able to share your screen. And unmute yourself, and you should be good to go.
All right, can you hear me and can you see my screen?
Yes, sir.
Okay, so what I'm going to do actually is they've definitely covered the Family Paid Leave Act really well. What I'm going to do is just do a quick run through, really kind of an update. I looked at the last time that you had a presentation on the Paycheck Protection Program, and since then, even with the FAQ that is on the website for both chambers, probably all the chambers actually, even then there's been some updates. So I'm just going to kind of quickly go through that. Some of you might not have been through that program, and then tell you what the updates are since even a week ago. So you're here again is the eligibility requirements. You should be familiar with those. Of course, it's less than 500 employees. We've gone through that. That's pretty straightforward. Just a reminder of that. And also that, again, the Q&A goes into more detail in terms of eligibility that wasn't as specific as before, especially as we'll get into as it relates to affiliations. Here's the terms. There was one point their interest rate was 1%, but now this is if it's not forgiven. and it went down to 0.5%. And again, here's some of the key factors. These haven't changed. The interest rate, it changed at one point, used to be 1%, but the rest of these things are still the same. Those have not changed. And here is the reference to where you can find the application. This version 3 is the latest version. No substantial changes to the application for the borrower side. You see here that this is the same basic way when you talk about in terms of how it's calculated. There has been some more specificity around that, but in general, these things are still the same as before. And here's the certifications you should be familiar with from before. Those have not changed. I think one of the things, again, you are certifying these things. The first one is key, in this regard. Current economic uncertainty makes this loan request necessary to support the ongoing operations of the applicant. So it is important to realize that as a business, as an employer, that this is what you are certifying, that indeed you do need this money as it relates to the COVID-19 impact. This is the way the calculation is done as before. And then here is the general, this is currently the way that the general formula is to calculate the forgiveness if you meet the criteria in terms of the different things that are covered by, as long as you spend the money along these lines, this is the forgiveness is available to you, then essentially the loan becomes a grant and doesn't need to be repaid. I'll say more about the capping of the $100,000 relative to the payroll that as far as that goes in the Q&A. So here's where there's been some specific questions or changes through the FAQ. And one of the things, and there's the reference there for you, that the FAQ has been updated even since the last one. This is the latest one that's out there. And that's a key link as you want to know what's the most up-to-date changes to this program. You go to this website, and like I said, the last time it was updated was 4/10, so there are a number of things that some things that have changed. Other things, it's not necessarily changes, but it gives you a more specific definition. As you recall, that was one of the complaints, was there wasn't enough specificity and definition around understanding either the eligibility side for the borrower or on the lender side as well. Just to go through a few examples of those, like for example, one of those is dealing with question 7. I'm going to bring that up for you. And this is coming right from the Q&A, so you can see these for yourself. I'm just highlighting a few to give you an example. Question 7 here, then. Yeah, you should be able to see that. Question 7 deals with the exclusion. You know already, I'm sure you know that for employees that make over 100,000, and as far as including in calculated maximum payroll amount to determine your loan amount under the program, it's capped at 100,000. So you would only include it up to that amount. But the question here, though, was raised, as I've highlighted, does that exclusion apply to all employee benefits of monetary value? And it says, no, the exclusion of compensation in excess of 100,000 annually applies only to cash compensation, not to non-cash benefits. So, if there are non-cash benefits associated with that employee salary, those are not part of the exclusion. Another question is, does PPP loans cover paid sick leave? They do. Now, of course, there are, if you do also do the CARES Act as it relates to the sick and family leave wages, you can't get the credit as well as you can't do both. And so they have to be, you need to make sure you separate those, or the IRS will claw back on that one. But you can use it to pay those, but you can't do both. You can't take the credit and also get the loan associated with that. And then let's see. And then another question, question 14. This deals with the time period. And there was some lack of clarity in terms of the time period. What, the question here is that raised was, what time period should borrowers use to determine their number of employees and payroll costs, and when they want to calculate the maximum loan amounts? And so in general, the answer is that you can calculate their aggregate payroll costs using the data either from the previous 12 months or from the calendar year 2019. And so there are specific things around that. So in general, most are using from the previous calendar year, but you can use the last 12 months up until the time of the when you get the loan. And you see there's additional detail on that. This is a common question as well, and I think this hasn't changed, but just to be clear on this, that the eligible borrower is not to use independent contractors or sole proprietors if they're using them as employees or as workers. In other words, someone through a 1099 is not eligible part of the payroll cost amount, because they'll get this through, they'll be able to apply it for themselves. Another question that came up, and there's guidance regarding this, and this was also some ambiguity around this, is how do you calculate, what about federal taxes? And basically the answer is under this act, the payroll, it's you use gross without regard to those subtractions. And so the federal taxes imposed or withheld, you're looking at gross payroll. And the example they give there that's helpful is, for example, employee earned $4,000 per month in gross wages, from which $500 in federal tax withheld would count as $4,000 in payroll costs. So there again, a lot more specificity around that. And then also, because there has been an updated interim final rule, they've addressed that. The question was raised, well, what if we already applied under the previous rule? Do we have to go back and do I need to take actions, it says here on the updated guidance, and for example on these FAQs? And the answer is no. The borrowers can rely on those that were in place at the time of the application, but you can always go back and revise them for clarification purposes if you want, but that's not required. And then question 20. Another one, there was some update to, or in terms of clarity. This dealt with the time period associated with the forgiveness when you talk about the forgiveness of the loan on the back end. And so the question was, the amount of forgiveness of a PPP loan depends on the borrower's payroll costs over an 8-week period. And the question is the timing. When does that 8-week period begin? And here you have a clear answer now. The 8-week period begins on the date the lender makes the first disbursement of the PP loan to the borrower. The lender must make the first disbursement of the loan no later than 10 calendar days from the date of the loan approval. So this Q&A is very helpful, and I just gave you a few examples in that regard, but it's very helpful in terms of answering a lot of the questions that we've been getting as a firm, and other firms have been getting throughout this period. Very good source to go to as well. I also want to show you the actual website. I have it open here because this also, this is right, you have the link for this. And also they've added some additional guidance around, if you see here, the applicable affiliation rules. That's new, that wasn't there before. They've added some new things for the lender as well, but especially helpful is talking about the affiliation rules. Like I said, right here is the FAQ that's been updated, and I just gave you a few examples of that as well. Back to my slides here. And that's really what I have. Like I said, just really I know you had a webinar already on this program, but because there have been so many updates and changes, and I think in a very good sense, there's been more specificity, and I highly recommend going back to that, to the Treasury website frequently, and certainly take a look at the latest FAQ that's been posted. So that's what I have. Thank you.
Okay, great. Thank you, Robert. We do have a few, I've not seen anything come specifically through the chat, other than somebody did request, if you could go back to your first slide, Robert, for a second. Somebody was looking for the first, maybe that one, yeah. Just for a second, but we do have some folks who called in. There's about a dozen or so people that called in, so I just want to reserve a couple of seconds that if there's anybody who is a call-in, is not online and able to use the chat feature, if you have a specific question that you would like to direct, now would be the time for you to unmute yourself, and we'll take a couple of questions if we have any from the callers.
I've got a quick question.
Okay.
On the payroll protection program, when there's talking about your payroll costs and mortgage interest covering that, is it not covering your mortgage payment? It's just the interest?
Right. At this point, it is the interest under the PPP program.
Okay. And there is a chat question here. Whoops, sorry. There is a chat question here. Do you have any information on the back end forgiveness side of the loan grant process? What expenses can be included in the 25% other than payroll expenses? And for example, utilities, rent, interest, what are the record keeping requirements for that?
So here's the slide I had before. Am I sharing that right now or not?
Yes.
Am I still
Yes.
sharing? Okay.
Yep.
Okay. Here it is. Here's the way presently we calculate the forgiveness. So it does include, and it does say it has the 25% other than payroll, but this is how this is a formula that can be used to calculate the forgiveness. So what was the other question? Part of the question?
It just says what expenses can be included in the 20, and what are the record keeping requirements?
Well, the record keeping requirements, I'll have to see. They're going to be the same. You need to maintain. So it would maintain proof of having paid those expenses. So you would have, you'd have your regular type payments and invoices support your terms of the mortgage and the rent and the utility. So you just need to keep those invoices and proof of payment during that period as it relates to the non-payroll stuff. And of course, as far as the payroll side, it would be the same payroll type information documentation that'd be required in applying for the loan in the first place, which in general is the 940, 941s, it could be W-2s, W-3s. And some lenders will require more detail than others. And we did find that varies quite a bit. Michael can chime in on that one, but that does, in terms of what we've seen with various lenders, your particular lender might require more or less when it comes to the details in terms of proving in terms of applying for the loan, as well as in terms of being able to get the loan in terms of the forgiveness side. Okay,
and how about, I mean, utility is a pretty broad spectrum. Electric, water, phone. There's a question: are maintenance contracts included, considered utility as well, because it's a maintenance operation of the facility?
Yeah, that's a good question. I don't know, Michael or Lewis, I don't, in terms of the guidance that I've seen, I have not seen that detailed out as far as anything that's excluded from that to be defined as utilities. So I haven't seen in the literature a precise definition of that other than what would be generally considered utilities, which was the things that were just listed that are typically utilities.
Okay.
Marcia?
Yeah.
Make sure we got Lisa Starr's slide up too. Robert, she was requesting the interest years and payment slide. Is that what the first slide, I guess? Interest years and payment slide.
Interest years and payment. Oh, this one, I guess?
I think so.
Yes.
Yeah, yes, there's the terms. I think that's what, yeah.
Thanks.
Those are yeah. And again, these are the terms currently.
Yeah.
Yeah, right.
We got to keep stressing that. But
There's another one here. I have an employee that is classified as a full-time employee but only works 66 hours per pay period. Would they be entitled to 80 hours of the emergency sick leave, or is it prorated based on their work hours?
So if it's somebody that arguably be a part-time because it's different amounts per week, they tell you can look back 2 weeks or do an average going back 6 months. So there's specific guidance in the rules and in the FAQs that depending if the person has a varying schedule. So in that scenario, it would depend if the person has a varying schedule. Otherwise, you look back 2 weeks if they're a part-time person.
Okay. Are there any tax credits available to an employer who is continuing to pay their employees?
It would just be the employee retention credit, but that again, that's assuming you're not getting a PPP loan.
Okay, so if they don't take PPP, they can use that employee retention credit, but that
Correct.
goes away if they've applied for, or if they get a PPP.
Right, those credits would be recaptured.
Okay. Anybody else who's called in that has an additional question? Just giving it one more second. But I don't see anything else popping up in our chat window, and I don't see anybody unmuting themselves. Whoops. Are loans taxable income?
not if you're talking about the forgiveness of this loan, it becomes then it's treated like a grant, so then it would not be taxable. Correct, Michael?
Correct.
Okay. And then somebody said to confirm PPP does not cover the mortgage payment. It only covers the interest, correct?
Only the interest.
Okay. And Tara, yes, our plan is to get all the slides and to share them as part of a follow-on email to you all. So we'll gather all that up, share the recording, the link to the recording, as well as any documentation from our presenters that they would like to share, the slides and above. Is the grant money taxable income? Is another question.
The grant money.
I'm assuming they mean from the EDA loan.
Can you confirm, Susan, is that the EIDL that you're looking at, or are you talking about the PPP? No, the PPP forgivable loan, is that taxable income?
No.
Okay.
And back to the utilities question that was asked before.
Uh-huh.
The only thing that I have found is utilities spelled out as electric, gas, water, telephone, and internet.
Okay. Great, that's good clarification. And it says, what about rent from someone else? Rent is rent.
Yes, that's
Okay.
part of the forgiveness calculation.
Okay, and is the EIDL payment taxable?
The 10,000 again, I'm assuming.
Well, it depends on what they mean. The EIDL is a loan, unless they're talking about the up to $10,000 advance, which is if it's by itself, then that's something they get as they don't have to. That does not have to be repaid.
Okay, so if they get the advance and even if the loan is denied, but they get that $10,000 advance, that is not taxable? Is that what I'm understanding?
Don't believe it is.
Yeah, my understanding it is not.
Okay. With the delays of funding we are seeing through PPP, can a payroll payment be included as a covered payment retroactively before the 8-week period starts, or is it an absolute line in the sand? It says, as an example, if the payroll date is the 16th and we get the disbursement on the 17th, does it make that payroll ineligible?
I guess this is we're talking about from a forgiveness point of view.
Yeah, that, well, yes, yes, from a forgiveness perspective.
Well, it's 8 weeks from when they get the loan. Maybe I didn't get the question. It's 8 weeks from when they get the loan, actually get the loan. So they're not penalized for not having the loan yet when the period starts. The period starts 8 weeks from when they get the loan.
Okay, I think the question here is because there's been such a delay because of the enormous amount of requests that are being processed. The question, I guess, is asking, do you think there's going to be any forgiveness? This particular example, they said, okay, if we get the loan is approved and we get those funds on the 17th, but we've done a payroll on the 16th, is that payroll that we did on the 16th, can that be used as part of the forgiveness calculation? Does that make sense?
Yeah, I'm thinking. I'm trying to think of what guidance we have on that. Yeah, I mean, based on what's said, I mean, there could be very well something that would address that, but right now, I don't see, and you could, Michael Lewis could chime in here, but I don't see in terms of the literature that's there, and like in the Q&A, that'd be a good question. I don't see where is specifically addressed. You know, it's like it says, you know, that's a good question. I don't think the literature addresses that at this point. And someone else, Michael or Lewis, can respond as well, but I don't see that being addressed.
And Catherine Rudloff is on the call, and she's with We Venture at FIT, and so she's part of the, you know, SBA organization and is counseling folks that are dealing with these applications. And so she said right now her understanding is that it cannot be retroactive, but she knows that those complaints that, you know, Congress is hearing that stuff because of how long it's taking for the money to be released. So it could possibly be addressed in future legislation, but her understanding is that it is not retroactive.
Right, and that's consistent with like you say, which is consistent with what is not being said. Yeah, it's just it's not addressed, and that's okay. You're right. Yep.
So the last question that I have here is, I have teachers, so the last payroll would probably be the end of June. What do I do if they don't want to go further into the summer to cover the 8 weeks for forgiveness terms?
What if the teachers don't want to go? Say that again. I'm trying to understand.
So if you're dealing with a seasonal business, is what I'm interpreting this as. If they, you know, so she has teachers on payroll, and they're technically supposed to be done in June. But if her 8 weeks, if this PPP doesn't come through and her 8 weeks extends beyond the timeline when they would normally not be working, any idea if there's, I don't even know. I mean, if for 8 weeks, if 8 weeks can't be covered in the time that she would normally have them on payroll, what are her options?
Right. I think this goes back to that other question, you know, what if we run a payroll right before, you know, the period starts? Am I going to get dinged on that? I think, you know, and then you could have your, you know, the SBA person again, Catherine, I haven't seen that addressed at this point. And it might be one of those questions that'd be good to raise,
Right.
But I haven't seen that addressed.
For additional clarification. Okay.
Yeah.
Great. Last call for questions. All right, seeing and hearing no questions, I want to thank our presenters, Lewis, Michael, and Rob for spending time with us today and providing such great information. And I want to thank everybody who called in and participated on this webinar. Just as a reminder, we're working together as a group to bring this you know, to Brevard County and Space Coast businesses as much as possible in a concentrated effort and a unified voice. So we appreciate you being here, and we hope that you will stay tuned for the next session to be determined. And we'll let everybody know as quickly as we can once we get that up and running. But we will go ahead and adjourn, and reminder that you will all get a follow-on email with links to this material and more. So hope everybody is safe and has a great afternoon, but we will go ahead and conclude this program.